Good evening, everyone. Welcome to IQI Australia Friday Pro Talks. My name is Lily, and I'm your host for this evening. Thank you so much for joining us. If this is the first time you join us, well, please allow me to briefly introduce our company IQI. IQI stands for International Quality Investment, not IOI or 101 or ICHI. As the name suggests, we are a global property advisory firm with connecting branches over 20 countries. If you wish to find out more about IQI, please leave us a comment in below. This evening, we are very honored to have our Chief Economist of Juwai IQI, Mr. Shan Saeed, to share his extensive financial and economic knowledge with us. Shan graduated from one of the prestigious elite business schools in USA, Booth School of Business University of Chicago. He also got his MBA from the Institute of Business Administration of Pakistan in partnership with the Wharton School University of Pennsylvania. It's quite hard to pronounce it. He also has been trained in alternative banking and strategies from Harvard's Business School in USA. Based in Malaysia, Shan has more than 20 years of solid financial market experience in the areas of private banking, risk and compliance management, commodity investments, global economy, what else? Branch and business strategy. In addition, Shan is a financial market commentator at many shows and magazines, included CNBC, China Economist Net, China News of Asia Singapore, International New York Times, The Age of Financial Daily, The Gulf Today, Wall Street Journal, World Business Journal Singapore, Business Today, and many more. In October 2017, Shan has been invited to participate the Belt and Road Initiative Summit to share his thought about the importance of infrastructure investment strategy for emerging economy in Washington. So I can go on the whole evening to talk about Shan's extensive knowledge and backgrounds, but I'm sure we all prefer to listen from him directly. So without further ado, join me. Welcome, Shan.
Good morning, Lily. What a wonderful introduction. I'm so honored and I'm so pleased. What a delight to join IQI Australia team early in the morning. And thank you for that wonderful introduction. I'm really humbled and honored, Lily.
Thank you. Thank you for, I mean, it's really our honor to have you here today, and thank you so much to join us. Yeah, I can't wait, to do a big revisions with all I have studied in my uni times. Actually, with all the materials and articles that you have sent me, oh my God, it's harder than my exam. So, because we have a time limit, we have to keep it as much as we can for you. So let's start. The first question, I just cannot wait anymore. Okay, Sean, we have been seeing these, rising interest rates happening globally, and the central banks are active against, and in order to dam the inflation, which included Australia, where we have another 0.5% increase, just announced it on Tuesday. So everyone headache about this. So how you reckon this circle? Well, the high rates, will keep continue. Like, what is the market insight at the moment?
Thank you, Lily. That's a very relevant and pertinent question. Everybody is asking, not only you, that where the interest rates are going. Lily, for this year, we are into higher interest rate regime. As I talked to you, 41 central banks have raised interest rates this year, and interest rates will continue to rise because, post-pandemic, inflation is rising. So you have two monetary policies, two strategies. Either you raise interest rate or you let your currency appreciate, like the US dollar is appreciating, it's becoming stronger to control inflation. Not that easy for central banks to be in this tough position. But in the last 15 years, starting from 2007, central banks have taken sole responsibility in delivering economic outcomes, not out of choice, but they have to. So I think central banks will play a major role in controlling this inflation. And rightly you have shared this slide from Financial Times that interest rates will continue to rise. We will see Fed, the big four central bank like Fed, ECB, Bank of England, and Bank of Japan, they will continue to raise interest rates. Right now, the US just raised 75 basis point last month, and now globally, all the investors are looking at what they're going to do in their September meeting, in November, and in December. So we expect, like Goldman Sachs, that they will hike interest rates by 50 basis points in September. Then in the November and December meeting, they will hike by 25 basis point each month. So this will take us to 3.5 percentage points in US. I think with the same ECB, the European Central Bank, Bank of England, and Bank of Japan will also raise interest rate. But you'll be surprised to know that if you pick up today's Financial Times that I've shared with you, despite inflation, despite interest rates going up, the property market in UK has gone up by 11%.
That's fine.
So everybody
Yeah.
has been saying rising interest rate, inflation, property market will crash.
Mm.
It's not happening. And we
Yeah.
at Juwai IQI, we are dealing in land, and the times are tough. And history has taught us those sophisticated and smart investors who understand history and economics, they have always taken position in tangible assets. So Yusuf and I will always talk about tangible assets. What is tangible asset? Real estate, gold, silver, arts, farmland, luxury goods, luxury cars, luxury watches. So in my opinion, this is history that has taught us in tough times, the only fixed asset that goes up is land. And Juwai IQI is dealing with land. So, this is not like Bitcoin. Your house is your own. You can go and touch the walls of your house. You can go and touch gold, silver, because that is tangible, that is physical. So I think more and more sophisticated and smart investors, family offices, institutional investors, hedge funds, fund managers, sovereign wealth funds, they are going into real estate. So real estate, when me, Kashif, and Daniel, we wrote this book in 2015, the title of that book was Real Estate, the New Global Currency, and it is happening right now in
Mm.
front of us. So you should share with your global investors, the investors who are quite keen in Australia, despite the interest rates going up. Australia has maintained one thing, and that is, like Canada, it has maintained macroeconomic stability. What does it mean? Political stability,
Yeah.
economic stability, financial stability. So when global investors, those sophisticated and smart investors, they look at Australia, they look at stability. The country is very stable, education system is very good, healthcare system is very good, and overall the employment opportunities are quite attractive for those investors who want to relocate to Australia. Like I, in the last 5 to 6 months, I have come across a lot of my networking from France, from UK, from US, from Holland. They are exploring Australia, and they are trying to relocate to
Wow.
Australia for their next destination. So I think this will be quite attractive for you as a company to talk to those investors, to network with those investors who are looking Australia from a long term perspective, 25, 30, 35 years, who want to raise their kids in a country where education system is very high, where job opportunities are very attractive, and most importantly, post COVID, healthcare system has become very important. Yes, Australia was locked down, but eventually all the countries, they have to open up, they have recovered. uh, so this is good. So overall, I think most of those smart and sophisticated investors, they are not really bothered about higher interest rate, and that will continue to make real estate as a very attractive asset class for the long run.
Yeah, can't agree more. Like we have been witness, in the last 7 months, right? The investor are routinely their funds, from equities to bond to commodities to housing market. And we always knows, right? Real estate is the largest asset class in the world. So back in 2020, right, real estate already make up like 60% of the world's non-financial assets. That's why what you says, right, I can't agree more. So how do you see the property market in the next 6 and 12 months?
Thank you, Lily. You are a very smart woman. This is the latest issue of Economist magazine. What you just shared, it has reported in this paper, page 56. It talks about real estate. And as you rightly mentioned, the global asset class, real estate contributes 68%. So imagine you have 100%. Out of that 100% pie, 68 goes into real estate. Why real estate? Because globally, those investors who understand that when you have economic fragilities, when the times are tough, real estate is a hedge. Real estate is preservation of your wealth against inflation, against economic uncertainty, against shenanigans of equity and bond markets. And what you rightly mentioned, that investors are rotating their funds. So from equities, it is going into bonds, bonds into currencies, currencies into real estate. So this is happening in the last 2 years or so. So I think real estate will have that, attractiveness for those investors who are looking at the for the long run. And why do I say this? Because I foresee inflation will continue to show its head for the next 1 year or so. And how do you control inflation? A lot of people in Malaysia and globally, they would ask me. I said the panacea to control inflation is monetary deflation. What is monetary deflation in a simple layman's language? It means you cut the velocity, you cut the circulation of money. That's how you control inflation. So what the central banks are doing globally, they're raising rates. So what happens when you raise rates? The money that is into the system goes back into the banking channels. So once the money that is in circulation is absorbed by the banks, the money circulation comes down. So when money circulation comes down, inflation eventually slows down. But it doesn't happen overnight. It doesn't happen in 1 week or 2 months or 3 months. It takes good 12 to 15 months for that money circulation to get absorbed into the banking channel. And that's how you control inflation. So a lot of people, they have this illusory thinking that inflation, once the central bank they raise interest rates, the inflation will come down by 1 week or 1 month or 6 month time. It doesn't work in that fashion. The standard procedure is for any policy lever the central banks undertake to raise interest rate, it takes good 12 to 15 months for that policy lever to make an impact. So I think eventually inflation will come down. What central banks are doing, this is the right approach to do. This is the only monetary tool apart from having an appreciating currency to control inflation. And once the inflation comes down, then we will see more and more investors they're going into real estate and other asset classes. But for the time being, I've already shared this issue with Priscilla and you. You can share with your global investors that why you continue to believe that when investors globally, 68% are going into real estate, it has to be some solid reason. It has to be some solid critical thinking for those investors who are making position or taking position in real estate. So real estate will continue to be attractive. Yes, there are other attractive classes like bonds, equities, commodities, but real estate will continue to drive the global investment, and many investors will have real estate in their portfolio. So once you have real estate in your portfolio, at least it gives you peace of mind. So Yusuf and I, we always share. So you ask one question from investors: do you want peace of mind or do you want sleepless nights? If you want peace of mind, go to real estate, go to gold, silver. But if you want sleepless nights, then you go to bitcoins and derivatives and da 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 da. So
Yeah,
it's all
can't
about tangible stuff. It's all about physical stuff. You can go and touch the walls of your hand. You can touch gold, silver, luxury cars, luxury products, yachts, expensive watches. So these are becoming the norm. Even if you look at Australia, the southern Australia is famous for one thing, and that is vineyards. A lot of customers are taking position in farmland and vineyards. Bill Gates. Bill Gates has invested $786 million in farmland in 18 states in US. So when a investor like Bill Gates and Warren Buffett are going into farmland and real estate, it means they understand the market. And not only that, I have studied in US, and endowment is a huge business. A Harvard endowment, which is the largest, they have more than $40 billion in the AUM, asset under management. They took position in Hong Kong real estate in 2017. And one of the alums from Bain, convinced Harvard Management Company that manages the Harvard endowment to invest in real estate in 2017. 2003, Harvard invested in New Zealand farmland. Again, one of the alums from Harvard Business School convinced the HMC, the Harvard Management Company, to invest in farmland in New Zealand. The good news is, 20 days ago, Harvard Endowment is setting up the office in Singapore, and they are quite bullish on the Asian real estate market. And Australia becomes part of the Asian real estate market. I wouldn't be surprised if endowments are looking at Australia in the long run. So I think the good news is most of the family offices are being set up in Singapore, Monaco, Dubai, London, New York. They would take huge position in ASEAN, and they would take huge position in Australia, especially in the real estate market, which is still very attractive. Australia is so huge, but the population is just 22 million, just like Canada. So the opportunities are immense. So, in my opinion, real estate will continue to be a major driver for many economies in the next 25 to 30 years.
Wow, can't agree more. To be honest, right, I have more inquiry levels right this year for the regional area, for the farmland, for the vineyards, and for big big premises like hotel building, office tower. Yes, I do have. You are so right, and the money is not only from America, also from Middle East, from even from Japan. Yeah, can't agree more. Yeah. So you also mentioned about the step fractions. So it has been in your article as well, and you did mention about that. A lot of people actually ask because people heard about inflation, but not so many heard. Even some people's right, young generation, they never heard about stagflation because they're so lucky. Because by the time they're born, like especially those born in year 2000s, right, all they see is the economy was so good, so they
Yeah.
don't know what is stagflation. So what the history have taught teachers, like what our smart investor they can do in order to protect their wealth if the step fractions is really happen. It's good to have
Yes,
inflation all
Lily.
the time.
Yes, Lily, you have asked me a very good question. November 2020, we have this newsletter, and I would request you to please share our newsletter with all your valued and sophisticated and smart investors. November 2020, uh, we wrote, we shared in our newsletter, stagflation is going to enter in advanced economies. And at that time, many of my friends, they did not believe. They said, Shan, it's an outlier. I said I was invited in September in a webinar by some of my friends from Stanford University. And during that webinar, there was a general consensus among 12 to 13 people that stagflation is coming, history is repeating, 1970 is coming back. So, what is stagflation? Stagflation is when you have higher inflation, the prices are rising, and you have lower growth. So, after 52 years, we are witnessing stagflation, and I am glad that you and Priscilla have put this in your slide, that what the Mirror was saying and what the World Bank president was saying in Financial Times. So we at Juwai IQI, we are quite obsessed with facts and figures. We don't share Cinderella stories. We don't share James Bond stories. We don't share tabloid stories. It's backed by facts and figures. Investors only respect you when you share facts and figures. Once you start sharing Cinderella stories and James Bond stories and da 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 da, they say, "Oh, Shan is a waste of time." When I go and speak in public, I am very careful because I have studied with Nobel laureates. I was talking about Chinese yuan on 7th January 2011 in New York. And people were laughing at me. And the only gentleman who believed in my insight was my Nobel laureate professor, late Professor Gary Becker, who flew down from New York to Chicago, from Chicago to New York, sorry, just to listen to me. And he gave me 7 out of 10. The audience gave me zero. They gave me one. They say gave me two, and they say Shan is mentally retarded. Shan is on drugs, and Shan has got low IQ level. 30th November 2015, Chinese yuan was included in the elite basket of currencies called SDR with IMF. So when investors they look at our newsletter, they look at our thoughts, and they see what is happening right now. They say, okay, we want to follow IQI. So IQI is not a real estate brokerage house. It's a company that is beyond real estate. So if you look at our corporate slogan, it says beyond real estate. So our agents, our 25,000 agents can talk about the interest rate outlook. They can talk about the commodities market. They can talk about the oil market, the gold market, what is happening in the global macro. So our strategy is that once our agents they go out in the market, they should be smart enough to talk about not just about real estate but about the global macro, what is happening in China, Japan, US, Europe, UK. So when investors they talk to our agents, they know that they understand the global macro better than other agents who just talk about real estate. When investors they talk to you about real estate, they want to know what is happening in gold market, what is happening in iron ore, what is happening in wheat or copper. So you should be able to answer them with facts and figures. So our newsletter is very broad based. It covers many regions, and it covers what the burning issues are, what the burning issues are, supply chain, post COVID, where the economy is are heading, where sophisticated and smart investors are parking their funds. So I think in order to preserve your wealth, history has taught us that real estate, gold, silver, arts, these are some of the investments that has really protected you against economic uncertainty. These asset classes are hedge against inflation, hedge against stagflation. So what happened in 1970s, gold prices went from $35 per ounce in 1970 to 20th January 1980 to $850 per ounce, 2,323% increase. Real estate prices went up from 100% to 300% in 10 years period of time in various regions. Look at Economist magazine, 14th June, 2 months ago. They reported that property prices in Canada, if you have invested $100 in 2000, in 2021, the property price in Canada has gone to $325, 3 times increase. They mentioned about UK, they mentioned about US. So property market over a period of time, it has really protected you. A lot of people they think that real estate is a flipping market. 1 year, 2 years. I say no, it's not a flipping market. It's a good 15 to 20-year cycle. You need to have patience. You need to understand the market, where the schools are coming, where the colleges are coming, in which area the office space are coming. Who is investing? Follow the sovereign wealth fund, follow the family offices. Because when these family offices, sovereign wealth funds, institutional investors, when they come, they invest $1 billion, two, three, five, 10. They don't invest like $10 million. No, no, that's a very small cake. They go for bigger cake, $5 billion, $10 billion. So you should talk to investors that look at the demographics, look at the area, the location, the developments, the new developments are coming. The demographics have become very important. Where the demographics are rising, that's where the demand for real estate will continue to go up. And as I've shared with you, people in my networking from France, from UK, from US, from Holland, they are looking Australia for the relocation. And a lot of investors have relocated in the last 2 to 3 years. Australian economy has opened up. They're offering visas for those skills set workers. So I think overall, I would say that real estate will be a real wealth protection and preservation for those investors. And tangible assets are back. As Yusuf and I always talk about tangible assets. So tangible assets are here to stay, and fancy assets will be gone very soon.
Thank you very much. So yeah, can't agree more. For those who just tuning in, we are broadcasting from IQI Australia, and Sean did mention about the newsletter, which actually will be distributed every month. So if you would be interested to receive a copy, please do tap a comment of subscribe into the the comment column so that we are more than happy to send you a copy on that. Thank you so much, Sean. So finally, Australia has, as you say, remained as one of the top choice for the smart investor to buy the property. So regardless of whether there are recessions or inflations or lower GPT, the land prices are rising globally. So, what is your view towards those like developing countries like Vietnam, like Cambodia, like Bangkok? How our investor in Australia can leverage from our foresight? What do you think?
Yes, Lily, again, it's a very good question. Your investors can really leverage when they look at either shared with you Harvard endowment, family offices. They are coming to Asia. And there's a reason coming to Asia. If you look at ASEAN, the GDP size is $3.2 trillion. Population is 620 million people, young middle class, rising income. Look at Vietnam, Cambodia, Thailand, Malaysia, Philippines. They are rising. Why? Because people have got income. Once you have income, obviously the purchasing power and the consumption patterns are solid. When consumption patterns are solid, companies would like to move into those countries where GDP is rising. Vietnam, rising star. Malaysia, and they have commodities, they have natural resources. So I think a lot of investors, they are looking at ASEAN. It's a very stable region. Why? Because the governments are very stable. They have macroeconomic stability. So all these countries, they are putting money in infrastructure. In 2014, I wrote that ASEAN requires 1.2 trillion dollars of infrastructure, and infrastructure investment has direct correlation with GDP growth. So a lot of those smart and sophisticated investors, they look at whether the governments have got money, whether they are investing in infrastructure. One of my Nobel laureate professor, Robert Fogel, late Robert Fogel, wrote a paper in 1964, and he mentioned about how infrastructure investment has strong correlation with GDP growth. And he studied about Japanese railroad system called Shinkansen, and he studied about American railroad system. And he came up with his analysis that why infrastructure investment has got solid GDP growth correlation, and why investors they need to look at infrastructure investment for their long-term investment. I still remember in February 2019, Financial Times ran a survey with all the top CEOs globally, and they say in the next 3 to 5 years where you will be putting your funds. And 53% of the CEOs said we will be parking or allocating our funds in Asia. So they asked the next question. It was a survey about 2025 questions. Why do you want to park funds in Asia? They mention about growing population, the demographics, rising income level, strong consumption patterns, and the young population. The young population was a focus. So I think young population, they want to consume more, they want to invest more, and that's where the target market is. So I think, in my opinion, ASEAN would continue to draw attention from those global investors, whether it's Malaysia, whether it's Vietnam, Thailand, Philippines, Cambodia. A lot of investors, they are looking at this region quite closely because the income levels are rising. They have got natural resources. Trade is becoming very hot. Trade and commerce is up. Most of the manufacturing are being shipped from this part of the world. Out of 20 ports, Malaysia has got two ports, Lepas and Port Klang, which are in the top 20 ports. Malaysia has got a strategic geography, state of Malacca. There are 124 states in this world. Out of 124, only two are important. The third one is getting important. One is state of Hormuz, which runs close to Iran. Second one is state of Malacca, which runs parallel between Malaysia and Indonesia. And the third one that is becoming very important is Bab al Mandab, which runs parallel with Djibouti in East Africa. So I think, in my opinion, investment opportunities are great. Your investors in Australia, they can always look at, Vietnam. They can always look at Philippines, Cambodia, Malaysia for the long-term investment, for the retirement investment. These regions are quite good. The lifestyle is there, the macroeconomic stability is there, the infrastructure is very good. And overall, in my opinion, as a financial market commentator, I would say the governments have done a pretty good job in ASEAN region in by investing in their human capital, that is people. People are educated, that is the most important thing. They are civilized, they are friendly. Governments are quite investors friendly. Infrastructure investment is will continue to drive Indonesia, Myanmar, Philippines, Vietnam, Thailand. They will continue to attract investment. So real estate, if you are investing in real estate, you can never go wrong. So my message to your sophisticated and smart investors, that real estate has become a new global currency. You should look at your, analyze your peace of mind, and most importantly, you should see how you can protect your wealth, how you can preserve your wealth. Tough times are coming, and in tough times, the only fixed asset that goes up is land. And IQI is dealing in land, and you should talk to Lily more often. Thank you.
Thank you so much, Sean. Thank you so much. You helped me to advertise as well. I'm so grateful. Thank you so
It is
much.
my pleasure, Lily. It is my
Yeah,
pleasure.
I do
In
learn so
fact,
much this.
In
Yeah.
fact, I am grateful to you and to Priscilla for having me in your show. At least investors can understand. One more thing, I follow this book. Uh, it's available on the internet. What is
Mhm.
happening in market right now in terms of inflation, in terms of rising interest rate? Milton Friedman, one of the greatest Nobel laureates from University of Chicago, wrote this book in 1990. And after 32 years, what is happening in the market right now, he has already mentioned that. He made a forecast. So you should have this, you can take a picture. I will send it to Priscilla and you. You should share with your investors that it's only $15. So $15 is very
Yeah.
cheap. They can read this book and they can leverage a lot what is happening in the global financial markets.
Thank you so much for all the positive comments, and that is
It
so
is my pleasure.
valuable, because I realize how many MBA you have, to invite you to have a free lesson that will cost them fortunes. So thank you so much for all the sharing for these evenings. Yeah. I
It is
think
my
I
pleasure.
would. Yeah, I should learn from Yusuf, right, to get you, on our screen, like on our platforms every month now, so
It
that
is so
we
easy.
can.
It is so easy.
Yeah, it is so much to learn, because as you right, like you say, we if toward the sophisticated investors, right, we won't just sell the house. We need to know what happens surrounded us as well. Yeah, just cannot just invest in blind. Yeah. Please, well, put up the disclaimer, because we forgot to do that part, because in Australia we have to always do, the disclaimer. So the presentations is for information sharing, and come to investment, please always get your personal your finance consultants, or your lawyer, or your accountants, before you make any big decisions, because our purpose to have the Friday Pro Talk is just to provide a free information or sharing. So I think that we almost, wow, we overrun the time, because it's so much that I focus on. I didn't even realize the times go. Yeah. Thank you so much, Shan. So hopefully we will arrange the next one very soon with you. Hopefully. Yeah.
God willing.
Hope
God willing.
you, yeah, you will have time for Australia markets and audience again. Yep. Thank you so much, Shan.
Thank you, Lily, and thank you, Priscilla. It's my pleasure. Please look after yourself.